Hi, welcome. My name is Yostafa Huber. I'm a US CPA based in Israel, and I forgot to turn on the mic. Just one second here. Okay, there we go. I'm here to speak today about the FBAR. What is the FBAR? The FBAR stands for Foreign Bank and Financial Account Report, or Report of Foreign Bank and Financial Accounts. FBAR is the acronym. It's also known as the Form 114. And it is not new. It is part of the Bank Secrecy Act of 1970. So a lot of people think it's new. It's really not. And it is not part of the tax return. It's a completely separate part of the US Code from taxes. It gives the Treasury, the Secretary of the Treasury requires that all US citizens, residents, and that includes green card holders, are required to report any relationship that they have with foreign transactions, foreign financial institutions, financial agencies. The difference is that until after 9/11, basically around 9/11, 2001, and the Patriot Act, things started to change. Before that, there weren't really any penalties or no implemented penalties if you weren't filing an FBAR. And between 2002 and 2004, things started to change, and Congress enacted non-willful penalties. So if you didn't file an FBAR, you couldn't just say, "I didn't know, it's not my fault." There are now penalties for that. Additionally, in recent years, we've seen, and very recently, we've seen significant increases in the non-willful penalties and the willful penalties. So things that used to be considered non-willful being, you could say, "It's not my fault, I didn't know." Those things are now considered, many of those things are now considered willful. So if you had reason to know, the Treasury Department can now say, "You were willfully negligent. You were actively hiding your head in the sand, and therefore you should have known." And we're talking about penalties between $10,000 and $100,000 per account. So these are pretty serious penalties for what could be a very easy report to file. So a lot of people get it mixed up with FATCA, FATCA, the Foreign Account Tax Compliance Act. FATCA didn't come about until 2010, but they report similar things. So FATCA feels like more of a burden on US citizens abroad, and a lot of people mix that up with FATCA. But really, the FBAR filing requirement, which is mostly what we're talking about today, is nothing new. And if you've never filed before, please speak with a professional about if you needed to file. If you realize you needed to file before and you haven't, please speak with a professional about what the implications are. It's not ideal to just go ahead and say, "I'm going to forget about past years. Let's go ahead and get this year in on time." Speak with a professional about the best way to go about that, because as I said, there can be some serious penalties on that. So do you need to file an FBAR? That's the number one question. You need to look at all of your financial accounts that are outside the US. So ignore anything you have on US soil. So your PayPal account, if it's a US based PayPal, if you have your cryptocurrency that is sitting in a US account, those things don't really those don't require reporting. And even foreign currencies, they're sitting in a US account. Foreign stocks sitting in a US account, anything on US soil basically does not need reporting on the FBAR. We're looking at anything abroad. And I like to remind people that this isn't taxed. So you don't need to get out of reporting anything based on any sort of taxation. You want to look at, I like to tell people it's more like the maximum amount of money a US citizen could touch during the year. So you need to look at all of the accounts that have your name on it, whether those are owned just by you, those are joint accounts. For joint accounts, you report 100%, even if you have a very small ownership. You also need to look at any accounts where you have a signing authority or power of attorney. So if you're the treasurer of an organization, or if you have signature authority on a parent's account, things like that, you need to keep those in mind. And what you do is you look at the highest balance during the entire year. We'll talk more about what exactly to look for in different accounts later. You find the highest balance in each account and you add up all the highest balances all together. So if you moved a lot of money around, you're really going to show your total is going to be much higher than the amount you ever really had. If all of those totals added together equal the equivalent of 10,000 US dollars based on the end of the year, then you're going to require an FBAR. So I will show you a spreadsheet that I have to calculate that a little bit later. But that's basically what you're looking at. You're looking at $10,000 threshold based on the year-end exchange rates, which you can find online from the Treasury Department. If you're hitting thresholds much higher than that, there are additional FATCA requirements, and those go with your tax return. But right now, we're really talking about just this FBAR, which is not really part of your tax return. So should you do your own tax? Should you be filing your own FBAR? So I generally tell people living abroad that you shouldn't file your own tax return, generally speaking. The tax code is very dense and huge and convoluted. The instructions for the FBAR are 22 pages. You don't even, I mean, listen, if you want to do your own FBAR, go for it. Read all 22 pages, but I'm going to distill it for you in hopefully the next 20 minutes or less and tell you what you really need to know. But if you have any questions, I can link to that 22-page document. It's okay. You can look up the instructions on your own. And if you want to file your own FBAR, go for it. What I like to think about it as is, do you clean your own house? Do you hem your own pants? Do you cook your own dinner? Sometimes you want to hire a professional tailor or house cleaner, or you want to go out to dinner. And sometimes you want to just hire a professional, do your FBAR because it's probably not that expensive. And they take the stress out of it and you don't have to worry about getting it in. I mean, you have to give them the information, but they're going to make sure it got in, God willing. If you have a professional, responsible accountant, they're going to make sure it's done right. So that's fine. That's great. You want to hire an accountant, go for it. Don't let anybody make you feel silly for paying for something that you could do on your own, because it's fine. We do it all the time. If you do want to do it on your own, then that's what I'm going to tell you about as well. But either way, you really should know what it requires reporting, even if you're having your accountant do it. I have a few questions here. Yes, Leah, I am located in Israel, as I said in the beginning. I'm a US CPA. I am based in Israel. I work mostly with Americans living in Israel. I have clients throughout Israel, and I've also invited some colleagues here today who are based in the US. Many accountants who are based in the US are not dealing with this very often. Many have never even heard of the FBAR. So it's not uncommon for people to come to me, Americans living in Israel, to come to me after using their family's accountant in the US for many, many years, and they've never filed an FBAR because the accountant didn't know about it, didn't think to ask them about it. So I hope that some US accountants are here and learn something and know now what to ask their clients. So you can do your own FBAR. If you don't want to, that's fine too, but pay a professional, please. Let's see. So how do you know if someone already filed your FBAR? Here I'm going to talk about some common misconceptions about the FBAR. Number one, your bank didn't file your FBAR, I promise. They didn't. So many people tell me my bank did that for me. Yes, your bank may have sent you a letter saying, we are reporting all of your information to the US. That's great. They are. Banks, they have asked you for a form, a W-9 form, hopefully, if you're a US citizen. You have filled out that form. You've given them your US Social Security number and your address, and you signed the bottom. That's not the FBAR. They are sharing your information, and that gives the US enough information to send you a letter saying, hey, where's your FBAR? Pay us a lot of money. So you still need to proactively file your FBAR. Did your accountant file your FBAR? Hopefully, if your accountant filed your FBAR, you have signed Form 114A, the signature form. Your accountant should not be filing anything without you reviewing it and signing it. Any of these forms that you sign from your accountant are only a signature page to some longer form. You are required to review the whole report, which for the FBAR is at least 3 pages in whatever software they're using. So make sure you review your FBAR carefully and sign the report. If you haven't signed anything, you can probably assume your accountant has not yet filed your FBAR. Will your accountant file your FBAR? For that, I would start by looking at your engagement letter. If you're using an accountant based in the States, please don't assume that they know to do your FBAR. Speak with them about it. If you're using somebody who is based outside of the US and specializes in this, they've probably been in touch with you about it. You've probably told them, I'm planning to do my own FBAR, or they're going to do it for you, or maybe you even accidentally told them you don't need one. But check on that. Be in touch with them. Check your engagement letter, see what it says, see if they've sent you emails, see if the emails went in your spam box. That's a really good way. If you don't see any communication, ask your accountant. Did your spouse file your FBAR? So I want to speak about joint filing FBARs, and I'm going to talk about that a little bit more when we go over the example. Technically, there are limited circumstances where one spouse can be covered by the other spouse filing an FBAR. That only works if the spouse whose name is not on the FBAR has only joint accounts with the spouse who's filing. You cannot have any separate foreign accounts on your own. And technically, you are supposed to file you're supposed to sign the 114A form, just like if your accountant was filing for you. Your spouse is supposed to have you sign that form. You can Google it, you can find the form, find 114A, and get yourself covered for that. If you're not sure if you filed an FBAR, check your email. If you think you filed your own FBAR, check your email, search it for BSA. Is one thing you can search for, or the full email that it would come from would be cm.bsaefiling@FinCEN, it's FINCEN.gov. FinCEN is the Financial Crimes Enforcement Network. That's the overarching organization that takes in these FBARs. So if you see an email within 2019, there's a good chance that that's about your 2018 FBAR. Read, see what it says. You need to make sure that your FBAR was accepted or acknowledged, which happens a few days after you file it. I believe you should be getting 2 emails total, one when you submit it and another saying it's been accepted. If anyone wants to correct me on that, I'm using professional software, so I don't really know the current process, but I'm pretty sure you're getting 2 emails. Okay. Let's see. When is it due? So if you Google when is your FBAR due, you're going to see April 15th. You're okay. Chill out. Read the small print. It basically says if you're unable to file by April 15th, you get an automatic extension until October 15th. You don't have to do anything. You don't have to write anything. You don't need to file any sort of excuse letter. You could just need to get it in by October 15th. That's all. So you're fine. You can do it tonight. What happens if you were late? So if you're late, I suggest you write a nice little excuse letter explaining why you were late. If you're really late, like haven't done it in years, please speak with a professional just to make sure that you're doing the right thing. You really want to dot your I's, cross your T's, and write a really nice excuse. If you haven't done it, there may be other things that you didn't file, other reporting requirements that you weren't aware of. So it's good to be in touch with a professional about that. What accounts need reporting? So I'm not going to make a judgment on some. There are definitely some gray areas here, but in general, anything you can cash out needs to be reported. And as I said, think of it as how much money you could touch during the year. So if you close an account during 2018, that still needs reporting. And if you open an account even on the last day of the tax year, that also needs reporting. And even if you had the same amount of money in both accounts, you have to report it both times. So if you're doing math, if you're trying to figure out ins and outs of your account, you're doing too much work. Just think of every single account you could touch. You do not need to report Social Security. That's not a fund generally. You don't need to report your interest, like the amount of money you could potentially get from a foreign Social Security. You need to report accounts in your name, generally that you could take out even with penalties. So a life insurance that has no cash value would not need to be reported. One new one that I just found, if you're I think it's just in Israel, but I'm sure a lot of countries have it. We have Paybox. And I went into my Paybox account, hadn't been logged in a very long time, and it said I had a balance of 40 shekels. I didn't know Paybox could hold a balance. So yeah, I guess these need to be reported. And there's new accounts every year that we are that we're learning and realizing, oh no, we didn't think of PayPal or Amazon, things like that. I know one thing that for sure needs to be reported is if you have a gambling account. I know those aren't common, but I like to keep it in mind as the equivalent of other things. So if you have an account with an online casino, that there's an amount of money sitting there that you could potentially cash out, and that requires reporting. So if you have something similar, I think of Paybox as similar to that. And I would say, yeah, that probably does. It's not to say I'm not going to change my mind tomorrow, and I don't want to make I'm not the authority on these things, but based on my understanding, if it's an account that you could cash out, or if something you had at any point during the year, go for it. There's also, as far as we understand, there's no penalties for over-reporting. So in general, we say when in doubt, report it. As a professional, I can't go about asking all my clients for things that probably aren't necessary. That wouldn't be efficient. But if you're doing your own FBAR, you can make some of your own judgments here. When in doubt, generally report. Now I have some examples that I prepared. So as I go through these, I'm sure that I'll think of some common misconceptions to point out for you. So this is a spreadsheet. This is not the FBAR. This is a spreadsheet I have created myself. I'm happy to share it with you. You can get it by leaving your email, and if there's a place on my website you can get it, or you can just message me your email privately, preferably. I will get it to you, God willing, within 24 hours. Hopefully you can see this on your screen. Let me see if I can blow it up a little bit. Let's see, there we go. Okay. So what I have done here, I have created this fictitious client of mine. Any resemblance to any real people or events is purely coincidental. All numbers I have made up. Hopefully there are nobody's real numbers. So I have created this client here. Remember, this is my own spreadsheet I have created. This is not the FBAR. I will show you the FBAR in a minute. I'm just showing you what accounts I've made up for this client. So my client, Sam, has 2 pension accounts, or one of these might be a Karen Hishtalmud, or some other sort of savings account, 1 bank account in Israel, and 1 bank account in the UK. These are all accounts he owns separately. They're only his. These are the balances in the original currencies. And I have input here the exchange rates. These are all based on the Treasury year-end exchange rates. Even if the highest balance was at the beginning of the year, you use the year-end rate. And if you take my spreadsheet, I have links to all of these things, the Treasury year-end rates. I have a link to my blog post. I have a link to the actual e-filing BSA system. So I'm happy to share this with you. In addition, Sam is married, and his wife, Betty, they share another Israeli bank account. So their Israeli bank account has 28,845 shekels, which is the equivalent of less than $8,000. And he also has this little account that he never closed from before he was married, and he just can't seem to get that thing closed. So it's sitting there. Even if it had a 0 balance, it is sitting there. He must report it. So I've purposely used really small numbers to demonstrate that even though not a single one of Sam and Betty's accounts are over $10,000, they do require an FBAR. And on my spreadsheet, I have the USD equivalent, the USD total. So if you fill this in right and use the correct exchange rates, you can see that they do need an FBAR. They have a total over $10,000. So let's go to our example here. Second, okay. Okay, so here is the actual FBAR. And so I'm going to walk you through this, and I'm going to show you some very common errors here. So the filing name. This is more for your personal reference, and I strongly recommend that you add the date, the year that you are reporting. If you are filing an FBAR today, you are reporting 2018 most likely. You are not reporting 2019 because it hasn't ended yet. So I recommend you put your name and the year in here, because this is all you're going to see when you log into the BSA system to check on your status. This is the area you use if your FBAR is late. We're filing a 2018 FBAR. It's not late yet. We're leaving it blank. If it was late, what I would generally do is scroll down here. I'm not going to use any of their canned responses. I'm not going to discuss why. That's how I learned to do it. I'm going to choose other, and I'm going to write my own really, really great sappy excuse letter. 750 characters maximum. But we're not late, so we're not doing that. Now we're going to go on to the second page. Again, this is the FBAR, and it is very important that you have this open in Adobe Reader. It's a very finicky form. So if you don't have it open in Adobe Reader, you're really likely to get little errors that you won't notice until you go to File and it won't work. The report, you must put the year up here. This is what the BSA system sees. This is the year you are reporting. Right now, we're reporting 2018. We're reporting all the accounts we had during 2018. Fill out all your information here. Again, it's a finicky form, so if you don't do it in the right format, you're going to get an error and it turns red. And don't be scared. You just make sure it's the perfect format that they want. So for the taxpayer ID, they want no dashes. For the individual date of birth, they want slashes. And if you're not sure about something, you can scroll over and it has really good instructions. But just fill it out carefully. If you have less than 25 accounts, you click no's. So we're going to get started on to, these are all the accounts owned separately. Only accounts that are only owned by Sam, nobody else's name is on these accounts. And generally pensions, I've never seen a pension that's jointly owned, at least not in Israel. So these all go in the separate section. I click other because it doesn't have a drop-down menu for pension. I'm not choosing security. I'm choosing other and pension. I will look at the comments later and see if you have any other questions about what kinds of accounts need to be reported, please comment. And when I'm done with this example, I will look at those. So we're reporting his 2 pensions, or one might be some other pension type fund. Most of my colleagues, I think, are calling them all pension. We've had discussions about this. I'm not going to get into it. There's gray area. I call them all pension. This is his little bank account that he couldn't manage to close, $28. Yes, it does require reporting. Not only that, the BSA instructions say round up to the next dollar. So even if this converted to $27.15, I round up to $28. It's just one of those little intricacies that are in the instructions. One last account he has separately in the UK. Now he's got his joint account with his wife, Betty. So we have all the information about the account. Here's a really common error: the number of joint owners. If there are 2 total owners, including Sam, you write 1. It's how many owners besides the person who's filing the FBAR, so usually besides you. So for most joint couples, most married couples, this number should be 1. That's a really common mistake. So just take a second to look at that. And if you filed an FBAR, look at your FBAR, see what you did. This is his wife's information. If it is a joint account, I know it can be confusing. It says principal joint owner, but it is the principal joint owner besides the filer, besides whoever's filing the report. So let's say there's 4 owners, and you're filing the report. You have 50% of the account, and the other owners have smaller portions of the account. You might think, well, I'm the principal joint owner, but no, it's the next person. And if they're all equal, just pick one. I don't think there's any rule about how to pick one. Just pick one. It does require an ID, so that might help you choose who to pick, whoever you have an ID for. But it's not you. It's not the person filing the report. It's the next other person on the account. Then, oh, look, Sam has signature authority over his dad's account. His dad lives in Boca, but his dad used to live in Israel. So his dad has this little $15 account that he just uses once in a while when he vacations here. And Sam has signature authority over it because Sam lives in Israel. So to make it easy, he's got signature authority. He must report this account. So his father's social security number goes here. And this little account that he has signature authority on goes here. If all of Sam's accounts were well under $10,000, but his father, he had signature authority on his father's account sitting here over 10,000, he would need an FBAR. Signature authority accounts can cause you to have an FBAR requirement. I'm not going to talk about much about consolidated reports, as mostly businesses, doesn't apply to most individuals. And then this, if you're a professional paid tax preparer, then you put in your information here. For most, we're assuming you're filing, we're talking about individuals filing their own report, so nothing really needs to go here. And then we can go back home and we can sign the form. When you're totally done, you've checked it, it looks good, you sign it, you agree, and you probably want to print it to PDF. When you print to PDF, it will give you an error reminding you that you cannot submit the printed form. You have to e-file your FBAR. That's the only way to file it, is to e-file using the BSA system. I'm not going to show you how to do that now because I'm sure if I do that, a bunch of my personal stuff will show up in Chrome. So I'm going to just leave you to figure that out. But you can find links on my blog post and in the spreadsheet, and you can see. You need to save it. I'm not even going to do that because you'll see other file names of my clients. No. Okay. But you save it and then you can validate it. But generally, if you don't have any red or yellow boxes, you did okay. After you file it, make sure that you log back in, or make sure you got an email and you confirm that it actually was accepted. Some other things I want to point out about this form. Notice that I don't have any dashes in any of these. In the last couple years, the form has gotten very picky. Number one, you need to make sure you have the current version of the form. I believe it changed, I want to say last year, though it all flows together. So look really closely at the top of this, effective October 1st, 2013. I'm not seeing where it says the due date here, but just look. If when in doubt, just re-download it again. If you have an old version, especially an old version that's more than 2 years old, you can't even cut and paste from that to the new version. It just corrupts the whole file. You have to start over. But in general, most years, you don't have to redo the whole thing. You can just do save as. So you save this one is 2018. Next year, you open the same file, you do save as. You make sure you change this year, make sure you change this year, the really important ones, and then change all the numbers, add any new accounts. Not that difficult. Just looking at I have a little list of common mistakes here. I'm going to go back and see if anyone has questions. Let's see. Okay. Okay. So as I said, make sure you don't have any little dashes. Make sure that if you're the joint owner, it's how many owners besides you. I generally take out every dash, dot, and comma, even from the addresses, just to be extra careful. And also, if you have any questions, unlike the IRS, the BSA is actually pretty good about answering questions. You want to make sure you're not calling the IRS. They'll be confused. A lot of IRS people don't even know what the FBAR is. And you'll just get passed around to many, many people. You might not get the right answer. Even if you call the BSA, you might not really get the right answer. But if you're having a trouble filing, not a really detailed law question, if you're having trouble filing, they're actually pretty good about that. So you can even email them. They actually do respond to emails. So I can give you the email address, or you can look it up. But it's make sure it's the FinCEN.gov, nothing with IRS. It's not connected to the IRS. I want to pull back up this my spreadsheet for a second and show you a couple little helpful things if you are using this, especially if you're in Israel. And we were going to talk about joint accounts. So we have Betty here. Now, let's say Betty's only account is this joint account with Sam. Betty does not need her own FBAR, but now Betty has a pension account. Even if it's a really minimal pension account, Betty now needs her own FBAR if the total of all her accounts hit $10,000. So FBARs cannot be jointly filed like a tax return, and that's a really common misconception. So also on this spreadsheet, if you are in Israel, I have a lot of helpful addresses here, because you need to report the address of every bank So I have all the fund addresses. These are all the most common pension accounts. And I also have, I download this right off the Bank of Israel website. I have the bank addresses. So if you don't know the exact address or even postal code, because you do need the postal codes, these are all for you if you want to use my spreadsheet. But again, this is not the FBAR. This is just a helpful spreadsheet. Do we have any questions about what kinds of accounts need to be filed? I'm not seeing any questions, but I appreciate the support. Hi, Joel, my brother. I'm glad to see you made it. I'm happy to answer any questions that you have. Okay, so make sure you're including every account that you can touch. This must be filed every single year. Your bank didn't do it for you. You have to do it yourself. Let me know if you have any questions. Thanks for watching.